New data reveals that debt nearly doubles compared to income in Canada. This is absolutely mind-blowing. So let's get right into it. So Better Dwelling just released this data. Canadian households at risk as debt nearly doubles income. Just think about that for a second, debt doubling income. Kind of crazy. A household debt to income ratio is the ratio of debt held by a household in contrast to their income. A rising ratio means that debt is accumulating faster than income. A falling ratio means that income is rising and or households are paying down their debts. Generally speaking, a stable or falling ratio is ideal. A rising ratio is often accompanied by an economic boom, but drags future growth as people repay that debt. The reason is that debt utilized gives a short-term boost to consumption today at the expense of income later. The higher the ratio, the bigger the drag will be, and the greater the odds of a financial crisis, right? So where the hell are we at right now? And I want to show you this because they talked about growth there, and you did have a pop in growth. If we go back to January, so they're talking about the first quarter of this year. So if we go back to January, you can see that the GDP numbers were actually quite high for January there. Now, if you zoom out to a 5-year, it doesn't look that high. But if you're looking at a 1-year, it does look pretty high. Now, there's a lot of seasonal adjustments that go on in that January number that I've talked about before that kind of makes it not very accurate. But nevertheless, I do think it is the case that it's not contributing to economic growth, but people are just using that debt to sustain themselves because inflation has absolutely destroyed them, destroyed their income. Not just over the past 3 years, over the past 15 years, they've absolutely been crushed by it. So kind of crazy. So let's see what else they're saying about this data. It is nuts. So Canadian households are borrowing like there's no tomorrow. The DTI ratio climbed 6.2 points to hit 198.5% in Q1 2023. It's a massive increase, pushing debt to nearly double the share of income. The ratio also happens to be the highest ever recorded in Canada's history. Thank you so much, Justin, for that. You're doing a phenomenal, fantastic job. Great job, you fucking clown. So that's where we are right now, 198.5%. And just to put that into context, guys, this hasn't been updated by Trading Economics yet. Canada was number 4. That puts them to number 3 in the world for household debt to income. Fantastic. What a great country. And this is a debt Ponzi. This is exactly and proves the point that I'm trying to make here, that this is a debt Ponzi and it cannot last forever because you can't just have debt just rise endlessly whilst incomes don't. That's just never going to happen. I mean, you would have to be the dumbest person on the planet to believe that that could happen. It cannot happen. People run out of income to pay their debts and then they're screwed. And we're seeing this happen in real time right now with the negative amortization that the banks are doing for the mortgage market. You're seeing people, they cannot afford to pay back that debt anymore. The debt is just rising as well. So the risk is just rising of financial crisis. And people are saying, yes, this is preventing the housing market crash. And I agree with that to a certain extent. However, that's not going to last. That's not sustainable for the future. People's debts are just increasing. And you can see we're knocking on that door that people can't afford anymore. And we're really stretching the limits right here, which is different for different countries. And Canada is just running on fumes here. So it's kind of crazy. And I want to take you through this to kind of put it into some context. If you look at Ireland, which had a massive financial collapse and impact after 2008, you can see how the household debt to income, and not every country measures this, but the household debt to income in Ireland was peaking around 2008. It was peaking between 197 and 208, and it was bouncing around there before crashing down as debt destruction happened. The housing market went down and all the other things that went along there. So you can see how when you're up at these numbers, yes, maybe it can go another 7-8%, but you are really knocking on that door of it's not going to last anymore because people can't afford it anymore. When their income is this stretched, they just cannot afford it anymore. When their debts are dwarfing their income isn't growing, they're being run over by a bus when it comes to things like consumer price inflation. It doesn't matter how much the government lies with their CP lie to you. What you and I feel in the real economy in terms of inflation is the reality that people are dealing with in the real world. Whatever the government is telling you inflation is, it's irrelevant. It's irrelevant. The only thing that matters for is what the Bank of Canada does, because they're the only ones that believe that data, them and the herd, of course. So kind of crazy what is going on, guys. So let's see what else they're saying here. So it is mad. So if you look at this chart, you can see how this compares, and it's just gone parabolic all the way up to 200%. And if I show you this has not been adjusted, so bear that in mind. But once this does get adjusted, it's going to be all the way up here at 200%, which is just absolutely crazy. If you max this thing out, going all the way back to the 1990s, you can see that this is just so high. And you can also see that this thing really started to go parabolic around this 2004 period, which is exactly where I said the bubble started going parabolic. The lending, everything just went out the window, and that was really when you can pinpoint the bubble to starting to form in Canada. So the bubble has lasted 20 years pretty much. So it's been a long bubble cycle in Canada, but can it last forever? Is immigration gonna save the day? Oh my God, no, it fucking isn't gonna save the day, because look at this, guys. This isn't immigration, it's debt. Immigration does not make a fucking difference to this. If all the immigrants are coming in and they're buying stuff based off debt, they're in the same situation. It still creates the same economic catastrophe and financial collapse. And that's exactly what we're going to see in Canada. And I hope you can realize that and see that. And also realize that immigrants, they are more likely to leave than Canadians when the shit really hits the fan, because they don't have the ties, they don't have the financial support in Canada, they don't have the support networks here. So in a lot of cases, they have to go back home because they can't afford to live here if they lose their job and everything like that. They've got to go live with their parents back in their home country or whatever it is. So just realize that immigration trends can reverse. And we have a record amount of Canadians that are leaving and a record amount of immigrants that are debating leaving as well. The statistics, the polls, they're all out there. So there are two sides to this coin, and we only see the one because the real estate agents only want you to believe that there's only one side to this story, and that is immigration. It's just going to continue forever, and it's just going to send everything parabolic in price, and it doesn't matter if incomes are doing nothing. Everything is just going to be absolutely fucking amazing. Asset prices to the moon. It is the most ridiculous, stupid argument I have ever heard. It really is. Because these people, you only have to think about the income growth. You only have to pinpoint it to things like this to realize it is just simply not true, as you guys know. Sorry, I got a little bit off on a rant there. I apologize. And then it basically talks about moral hazard, which I've been talking about for a long time. So a sharp seasonal move is expected between Q4 and Q1 as the holiday income tapers and people pay their holiday bills. However, the 20.7 point increase in Q1 2023 was unusually large, implying debt accumulated 10% faster than income. These are mind-blowing statistics. That's like borrowing $110 for every $100 in new income in the quarter. And you know, you just have to think about how this is sustaining things like inflation as well, because we've talked about this before. If companies are able to pass on those higher costs to consumers, and consumers are just using debt, is that sustainable for the long term? Absolutely not. But this is what generally happens prior to a recession happening, which is looking like it's happening right now. So it's crazy. For context, in terms of points, the quarterly increase was nearly double the move seen a year before and nearly 5x the increase seen in 2019. Wow. So historically, this is large, and it's likely going to be to do with the inflation. It's likely going to be to do with the fact that households are actually hurting, and it's not a good sign because they are being destroyed. And what they have lost in real income growth that me and you both know they lost because the CP lie. What are they doing? They're replacing that income with debt. So is that going to last? No, it's not going to last. It's a recipe for a financial crisis, and I think you know that too. So anyways, let's see what else they're saying here. Canadian households haven't let their low income growth deter consumption. They're making up for it with debt. With such a high surge in credit relative to income, it's easy to understand how the economy is outperforming expectations. I agree with that. No logical model would forecast households suddenly borrowing significantly more as rates climb sharply. And you know, you've only got to think about this in terms of, okay, the household is thinking right now, as the Google Trends data suggests, that there is going to be no recession. There is going to be no, there's going to be a soft landing. Everything's going to be fine. The Bank of Canada, you know, the federal government saying everything's great. You know, I just canceled my Disney Plus. You can do it too. They're just thinking, yeah, you know what? Things aren't that bad. Everything's going to be fine. You're talking about the third most indebted households in the world, and you're trying to say that. And it's not just that, because we don't just have to speculate about what's going to happen. We only have to look at this, guys. Look at what is happening in Canada. Insolvencies on the rise amid interest rate squeeze. Former Bank of Canada economists talking out about this. So insolvencies are much a lagging indicator of the economic cycle. I totally agree. Usually they tend to peak 12 months after the start of a recession. We still haven't started a recession by the central planner's definitions, I might add. He continued, the question is, when are they going to peak and how bad is it going to be? And it's going to be really, really bad according to the yield curve, because you only have to look at this to realize that the yield curve is right almost constantly about these type of things. And you can see here that the yield curve has inverted so badly that we're talking about the same inversion, as I've said many times, as during the 1990s. And what happened during the late 80s, 1990s? I can show you right here. If we go to CDIC's website, let's see if there was anything happening in the financial system. You've got all these companies that failed during that recession. All these mortgage companies, look, loads of them, loan and mortgage companies. And it goes on and on and on. And they were all pretty much throughout the 80s and the 90s. So, you know, what was happening there was not a good thing. So what does that mean for what is going to come in the future? And to those who are just saying, Luke, the yield curve is just totally wrong. It's a total lie. Yeah, you cannot deny the predictability of the yield curve when you look at historically how many times it's been right, which is every single time. And if you want to ignore it, fine by me. But I'm going to stick with the yield curve. I'm going to stick in US one-year treasuries because I'm happy earning over 5% interest. Just waiting and having patience, which I believe is the key thing to have right now. People have got their heads in the sand. They are in denial about what's happening. And I can really feel that something bad is coming. I'm starting to get this feeling. I always get this feeling that something terrible is about to happen, and it's coming very soon. And it's you know, it's coming from looking at all this data. It's coming from looking at things like the yield curve and just seeing how bad it looks like things are going to get. But it's coming from what is going on here with the household debt to income. This is absolutely a crazy rise, and we're talking about this goes all the way back to 2010, Q4 of every year going back to 2010, and the rise is the highest. So you're talking about the biggest rise in 13 years year over year. So it's kind of nuts that people are thinking everything is fine. You know, people's debt, it dwarfs their income by it's double their income. Just think about that for a second. It's absolutely insane, guys. But anyway, if you've enjoyed this video, you might like that video there. You might also like that video there. I will see you in the next one.